Hi, this is Jordan Moorhead, and this is the Austin Real Estate Investing Podcast. Today we have Tamar Hermes on, and she's going to tell us all about real estate investing and what she's up to here right now. Hey, Tamar, how are you?
Hi, great to see you and be on to share with everyone about the great city of Austin and real
Absolutely.
estate here.
Yeah, Austin and real estate are both things that I love. And really quick for our audience, I know we know each other and you're pretty well known, but can you tell everybody who you are and how you're involved with real estate investing?
Yeah, absolutely. So I have been investing for over 25 years now, and I am both an active and a passive investor, which means that I manage certain investments, and then I also have teams and partners in place where they will manage the property, and I still get returns, which is really kind of cool.
Yeah.
And I also run a high-level women mastermind where we're leveling up at the multi-million-dollar level and also teach women real estate investing. Huge advocate that every person, especially women, should be buying real estate in any market. So, I mean, that's not to say any deal, but it's to say that in any market, it's always the right time to build your asset column.
Hmm. Love that. And I like how you're doing both. You're active and passive. So a lot of people think, oh, I have to be the landlord that does everything. And there's some people that say, I don't want anything to do with that. I'm just going to give my money to somebody else. So why do you do both?
Well, I do both because for a couple reasons. One is that at a certain point, your portfolio gets large. And in order for you to be active in everything, you have to be finding a lot of opportunities all the time. And what you're doing when you're passive is you're sourcing a lot of experts that might know, like, I may know how to run an Airbnb, but I may not know how to do a storage unit. Whereas, like, my friend Joe may be an expert with storage. So if I give him my money, I have a really good chance of getting a pretty good return on that. So
Mhm.
it's another way of leveraging, and I think that it depends on where you're at in your with your time. It's also that's a big factor because it takes more time to be active than it does passive, and it also depends on what you enjoy. So at a certain point, some people just really want the returns in real estate, but they don't necessarily like dealing with the people or the contractors or things that go wrong. I actually love all that. I'm kind of crazy like that. I like people, so to
Yeah.
me it's just all like fun. And so that's why I just ended up doing both.
Hmm. Yeah, and you talked about some different asset classes there too. So you talked about just specifically in your statement there, you talked about Airbnb and self-storage. So I imagine that having passive investments and active investments allows you to explore different asset classes. Is that something that you do?
Yeah, absolutely. Because it's just another way to diversify. So
Mhm.
let's say if you're building up your portfolio and you have 20 single family homes.
Mhm.
Well, we don't know, maybe something will happen in the single family homes, and where the market dips, or they're not as easy to sell, or they're not renting in a certain area. And so if you diversify and you have things in industrial, which is really popular these days with Amazon and all the stuff that's going in-house. I love industrial investments. So you can give some money to to someone that does industrial, and then you can make money on that. And so it diversifies and gives you more exposure to a lot of different asset classes that will probably perform really well in the coming times.
That's awesome. And it also allows you to be an expert in certain areas and you talked about finding the experts, about having experts in other areas that are really good at that. So I might really like self-storage. And let's say I'm great at putting together self-storage investments, but that doesn't translate over to industrial necessarily.
Mhm.
So that I might go find somebody that's great with industrial investing and invest with them, like you said, to diversify. So could
Yeah,
you
I
give
mean,
us, go ahead.
I was just going to say, like, with different asset classes, there will be some overlap, obviously, like the way you're sourcing the properties
Mhm.
and, the way you negotiate. But at a certain point, in terms of how to manage and get the best ROI on your return, that's something where you do either want to dive in and know all the variables, or maybe give it to someone who's done it a lot. Because like with storage, I mean, a lot of people say, oh, that's pretty easy. I mean, it's just store units, how hard can it be? Just automate it. I know people that have literally had run for the hills on storage units because it was just a pain for them. And then there's other people that just know how to automate it and do it and make it work and scale it and exit it. So, it's just something. You don't need to be an expert at everything. You just need to know the people that are. And the other thing I will say about passive is that it does help if you have some money. So if you're at a point in your real estate journey where you really don't have that much resource, then you probably do need to go into maybe something like a house hack, where you share a unit with a lot of people, or something that's in not as sexy of an area as Austin, but will still get you some returns.
Awesome. So you kind of lead me into my next question there. What are you doing right now in Austin, and what do you see that's working for you right now in Austin?
Yeah. So in Austin, so I have investments in Austin and San Antonio, and I
Mhm.
moved from California a couple of years ago, sold most of the portfolio there just for obvious reasons, because it was getting harder and harder to manage California with the restrictions for landlords.
Mhm.
And then started buying here. And what I'm doing is single family homes and Airbnbs. And as you know, I'm involved in prefab projects
Mhm.
with a partner, and so we're buying up several places in East Austin, tearing them down, and then putting up prefabricated. They're like modular for people that don't know what they are. They basically look like that. They look like a house that was built from the ground up, except they
Mhm.
do it in a manufacturing company, which is really phenomenal. And it generally will save a lot of time and money. The hardest part about prefabs is getting the partnerships, because everybody wants to do prefab. So
Mhm.
it's hard to get the deals where you can start doing that kind of work.
Yeah. So you talk about prefab and modular, and I think people hear these terms and they think, oh, you mentioned it, they think, oh, it must look like something else. But I've seen one of the projects that Tamar is working on, the one in East Austin, and I said that looks no different than the house down the street they just built from the ground up. And
Yeah, it's pretty amazing. You really can't tell.
yeah, and y'all put it up in a fraction of the time. Not even half the time is way too generous with the time period there. It was like a month or two compared to 18 months.
Exactly. So there's a lot of advantages to the prefabs, but again, like if you decide, oh my gosh, this sounds great, like Tamar's saying, it's fast and low permits and less money, but like I said, there are a lot of moving parts to it,
Yeah.
and to get into it is actually pretty challenging. So my partner is pretty is just a workhorse. I mean, he
Yeah.
just always gets his hands and everything, and like just makes it happen. So a lot of that has to do with the ability to find partners that can do that. And that's not to say you can't do it. You can do
Mhm.
everything. It's just that maybe if you decide, okay, I really want to learn about prefabs, maybe don't also do a million other things. Like don't try to master storage units while you're
Mhm.
trying to master that.
Yeah, no, I think that's great advice. Get really good at the one thing before you go out and try 10 different things. And I think that would be something I talk to a lot of people that are interested in doing, prefab or modular housing. They're always also interested in 10 different things. So, get really good, connect with people that are doing it, figure out how they're doing it, learn that in depth, and then go do prefab or modular housing. So,
Yeah.
Tamar, how did you get into real estate investing in the first place? You talked about you sold a portfolio in California when you moved to Texas. You've been investing over 25 years. What kicked it off?
So I was working in entertainment. I had a
Mm.
really pretty good job when I was 28, and I was making good money, and but I realized that I kind of had these golden handcuffs that a lot of us realize we have once we get into, I mean, I got a job in entertainment. It was pretty fun. No, it wasn't like no one was, really stressing me out, other than like the deadlines and long hours sometimes. But the truth is, it was pretty fun. It's just that I knew that in order to get the income, I had to show up for work every day. I had to do the job every day. And I didn't like that. I've always been, since I was young, and I grew up without a lot, and I felt like I didn't have a lot of choices when I was growing up. I really value more than anything just freedom of choice. Like, I'm huge on freedom of choice. And also, my father was a Holocaust survivor. I mean, I'm
Oh,
like
wow.
embedded, like my whole life is about like, how do you have freedom? Like, I feel like I feel like we're all meant to have freedom. But for me, especially, it was like, I don't care that I work all the time, because I decided what kind of work I'm going to do, when I'm going to do it. If I don't want to work, I don't have to work.
Mhm.
Those are all choices that I think we should all have. So anyway, what happened was, when I realized that, I started looking at my bottom line, and I realized that rent was really expensive. And so I took, at that time, $40,000 and bought a duplex.
In LA?
Yeah, in LA. I mean, it's worth a lot. I actually kept, it's kind of a sentimental, like, I know sometimes like people keep their childhood home, and I didn't
Mhm.
really have a childhood home. And so this is kind of like my like home that I kind of created as my kind of, home that I had from early on. So I keep that one, and I bought it for 397, and now it's worth probably 1.5. Even in this market, I probably could sell it for like 1.4, 1.5.
That's awesome. Yeah, I
Yeah.
know we had a guest on the show, Mark Hinteman, who's
He's my
also
friend.
yeah, he's an awesome
Yeah.
guy. He's in LA. His first property was a duplex in LA that he house hacked. I think there's a theme there. A lot of people get started by house hacking.
Yeah,
Great
absolutely.
way.
And the thing with Mark and Mark's story that's interesting, and this is interesting for people listening, like choices that you make. So Mark and I got started like around the same time. We both bought duplexes, both in good areas in LA. And the difference was that Mark was less attached to the property and more attached to making the money. I was kind of like taught in, oh my gosh, I have a property. Like, wow. Like, it was just so exciting to me. It meant so much to me. But the
Mhm.
truth is that, like, and Mark probably, like, I haven't looked at Mark's numbers, but my guess is that because, and just, I probably know, because I know Mark, that because he leveraged a lot, like he would, once it went up in a certain amount of value, he sold it, he bought bigger, he bought more, he kept doing
Mhm.
that. If you do that, that is the way to grow wealth quickly. That's a much, much better way to do it than the way I did it. But I still didn't, it's still not the worst day in the world, right? Like, when you have a property that's worth 1.5 and there's not really any risk there, and you don't have high payments or anything. So the truth is that both work.
Mhm.
And you just need to decide what your risk tolerance is, and like, don't worry, like, I can make more, I can make more, I can make more, but just think like, well, the main thing is that I'm building and I'm growing my asset column. That's the most important thing, because you're still going to have, at a certain point, you're going to probably have more money than you need.
Yeah, and you make a great point there. And the real estate can work in so many different ways. So as long as you talked about growing your asset column, as long as you're doing something over a long period of time, it's going to work out extremely well. What doesn't work is just not doing anything. Obviously, like you talked about, don't buy a bad deal. Don't just buy to buy. But at some point, just because you're buying, you're doing well.
Yeah, and whenever you buy, I always think that one of the things that's worked for me really well is, I'm a scaredy cat. I talk about it a lot in my book, The Millionaire's Mentality. All the time I say, like, I'm totally like, I was fearful. I had no money. I didn't have like, any like family that was gonna like bail me out if I screwed up. It was
Mhm.
on me. So I was more conservative. And the truth is that I hope that I can serve as an example to say, hey, you can be more conservative and still do really well. I mean, today I'm not as conservative as I used to be.
Mhm.
And I feel like just the opposite, like a lot of like the way that, the financial world is set up, it's like, oh, when you get older, you're supposed to like put all your money in the CDs and bonds and make sure that, you know, you don't lose any money. And I'm like, heck with that. Like, you know, I'm much more aggressive now than I ever was because I know more and
Hmm.
I trust myself more. So I just think that that you can really create anything from real estate and your assets.
Hmm. Yeah. Yeah. It's so important. And, you know, you talked about getting more aggressive as you get more knowledge. I think that one of the most important things you can do is invest in yourself and just gain more knowledge. I know you're in a mastermind, you have a mastermind, you know, you're always learning new things. Clearly the modular is pretty new and you've just jumped in that both feet first and said, hey, let's do it.
Mhm.
I'm confident in myself. I'm confident in this other person that's running it. Let's get it done. And just always learning helps you get there.
Yeah, and that's also, I think, what makes life exciting. I mean, none of us want a cookie cutter life, I think. I mean, maybe some, I don't even know if people that have a cookie cutter life really want that. I mean,
Hmm.
I think people want to explore and live big and see things, see the world and see how far they can stretch themselves. I mean, that's what I'm attracted to. That's what I think is really the juice of life. It's just fun. Like, I don't want a predictable life. I don't want to feel like I wake up every morning and I know what I get and and I don't want to take any chances because I don't want to lose what I have. I'd rather go all in and figure it out from that point. And that's also where you're also going to see the greatest rewards. Because if you're not willing to risk anything, you're just going to be listening to this and you're going to say, oh yeah, but Austin's too expensive. There's nothing here. I can't figure it out. And I mean, just before we got on this call, I was talking about a deal I just got and and you were saying that there's other people that are starting to make moves. I mean, there's always deals. Like, you also have to
Hmm.
approach it with the right attitude.
Yeah, no, nothing risk and nothing gained. And I think you talked about just living life to the fullest, but you hear about all these people that build extreme wealth, and then there's some people that lose it, but they end up right back there
Hmm.
so quickly because you can't take away that knowledge that they gained over time. And then there's all these people living just, I think you use the term just a normal life or a mediocre life, and that's fine. But if you're learning and growing over time, no matter what happens, you're going to be in a better spot later on. What if you just didn't learn anything your whole life? You got out of college and you said, I've learned enough. I've gotten out of college, and then you lose everything. Maybe you'll get back there, but if you were up here, you're going to get back to at least the baseline a lot quicker.
Yeah, and we're all capable of so much more than what we do. And
Hmm.
so, I hope anyone listening realizes that they absolutely can invest. They can invest in Austin, even though Austin's been expensive. I mean, prices are coming down, and you do need to be careful, but in any market, you need to be careful. You need to be careful when it was 3% interest rates. It wasn't
Hmm.
free. You
Hmm.
were paying a lot more for the property. You were in bidding wars. A lot of people got into that situation where they wanted the property so bad for that 3%, they were willing to pay like 100,000 over, like ridiculous amounts over. And that's not smart either. And
Hmm.
so, now that prices are coming down, I have on this new property, I'm going to have a 7.25% rate.
Hmm.
And it's not any more than some of the other properties I have. And it's fine. I mean, 7% is fine as long as you have a plan and a strategy and you can rent it. You can make things work.
Hmm. So for people out there that are looking to purchase right now, because obviously you're purchasing right now, I'm looking for a new home myself. What are your tips on how to avoid a bad deal currently? Rates have gotten high. It seems scary. What are you doing to mitigate your risk right now?
Well, I run numbers a lot. So I
Hmm.
will like look at my numbers over and over. And when I'm looking at the numbers, I also look at the worst case scenario. So when I'm running numbers, I'm not like, I don't, if I think I can make, if I can cash flow a few thousand a month, I don't put in a few thousand. I do like maybe 15. If I think I can get three, I might do two.
Hmm.
I'll always go more conservative and look at how the numbers look, because the truth is that you never know. In a market, a lot of people that got into this market in the last 10 years, they don't understand, that markets do go up and down. Real estate goes up and down. Like, even though people are like, it'll never go down, it'll never go down in Austin, it'll never go down. It will, and it is, and it has. And so, make sure, if you make sure your numbers work, they're going to work. Like, if you have a tenant and the tenant's going to pay the rent, it doesn't matter whether it goes up, down, doesn't sideways, it doesn't matter, because the tenant's paying the bills, and what all your expenses are. The other thing you can do to safeguard if you're starting out is to make sure that you get the best lending terms you can. So, and what I mean by that is, like, if you're very conservative, to me, I think that the 30-year fixed is an exceptional way to go, because for 30 years, it doesn't matter what happens, you're locked in. So yeah, if it goes down, you can refinance, but if it goes up, you're locked in. And in 30 years, that's a long time to lock in a rate. And you can also, like, if you're doing storage or multifamily, you can also lock in for 10 years. A lot of people are doing that right now. And just planning to hold. Now, with bigger properties, then you have to worry about prepayment penalties. Gets a little more complex, and it's a higher dollar game. So, I would say, if you don't know what you're doing, make sure that you have a mentor, or that you have a partner that is a more seasoned than you, so that you don't make big mistakes, because it can be pretty costly.
Yeah. Those 30-year fixed are sweet, because people don't think about prepayment penalties with the residential loans, because there aren't any. You got a 30-year fixed rate mortgage, your rate goes down 2%, you refinance, and you've got a much lower mortgage, and you only had to pay the cost to refinance. But with a commercial loan, if you've got a 10-year fixed rate and rates go down a lot, then you can refinance, but that costs a fair amount to get that done, because you have to pay the cost to do the refinance and the prepayment penalty, which is huge.
Yeah, I mean, those are much more complicated numbers. Sometimes there have been people that have shared, oh, it's just as easy to buy a 30 unit as it is a single family. And I'm almost like, that is complete nonsense. Like, it's a lot harder to buy a 30 unit than it is a single family. Yes, I mean, sure, there are certain things that are the same, but the numbers are different. You have many more people you're dealing with. There are a lot more variables. So I would say, keep it simple. Keep it simple when you start out. Don't go crazy, and don't try to, strike it rich on your first deal. Just hit base hits, right? Isn't that what we always, singles and doubles, and then you'll go really far.
Yeah, and you learn so much. So if you're hitting base hits and you're learning along the way, you're going to get better each time, and you're going to make more progress as you go. So I love that advice. So for newer investors, really, your advice is to start small and learn? Or you think, is it okay for somebody to buy that 30 unit on their first investment, or should they do a single family?
I think it's okay, as long as they understand the variables, and there's a lot of them. Like, so they have to understand that they're not getting a 30-year fixed, and that if they do decide to refinance at a certain point, there could be a hefty prepayment penalty, and they need to understand what those numbers are. They need to understand, if they're buying for a value add, like maybe it's a rundown place, they got a good deal on it. They have to understand, that they're going to be dealing with contractors, and and pricing. They have to make sure they have thorough inspections. I mean, it's not to say you can't. 30 units. I mean, if we're talking about Austin, it's pretty expensive. So if you have that much money, then I would say at this point, I would just go passive. I wouldn't even bother. Like, if you've got 7 figures sitting in a bank account, I would hook up with some great seasoned investors, and work that way, as opposed to trying to do that all myself. There are some tax benefits to, there's the real estate professional status if you do it yourself, but other than that, it's just going to give you, heartburn, really. I mean, it's going to be a lot of work, to try and manage all that. So, I mean, I wouldn't necessarily, I don't know that I would try that on my first go around, especially if we're talking Austin. I mean, if you decide you want to go to, like, Cincinnati, Ohio, or somewhere where it's not as expensive, but I mean, a 30 unit here, you're talking a lot of millions to get that done. So you got to really kind of know you're playing a big game. So you got to make sure that you understand what you're doing.
Absolutely. Yeah, and I think it's back just to gaining knowledge, is going to be the biggest and the best investment you can make.
Mhm.
So Tamar, could you tell us a little bit about the mastermind you have going on and some of the ways you help educate people?
Yeah, absolutely. So I have my book, The Millionaire's Mentality. That's the
Yeah.
easiest, most inexpensive way to kind of learn different ways to invest in real estate. And you can just get that book. It's actually on Amazon now. You just go
Mhm.
to tamarbook.com and you can get it. And that's awesome. And please leave a review if you like it. I would
Mhm.
appreciate that. And then I also do coaching based on that methodology on teaching women on how to invest. A lot of it has to do with um, getting past the overwhelm and some of the fear in terms of moving forward and getting clear on it, what it is that what direction they want to go in.
Mhm.
So I think that it's, they're big decisions. So I think that as you understand finances more, as you get clear, as you get all those things through the work with me, then it's just really easy to get into action and to feel really confident and feel supported. So that works really well. And then my high level mastermind is for multi 7-figure net worth women who are up leveling at in a way where they really want to be around like-minded women, even
Mhm.
if some of us are business owners and investors. And it's just a mix of really successful women, and um, we have meetings with investors, with experts,
Mhm.
and I do bring in some investments. We do retreats. We do 4 retreats a year, which are
Oh, cool.
really fun. So yeah, so it's a lot of connection and collaboration, and also outsourcing certain ideas that you need at that high level of net worth. It's the kind of things that you need to think and want to be thinking about.
Oh, cool. So you've got a book, you've got a mastermind, you do some coaching. What's next for you?
Well, I think um it's interesting that you say that, because I'm looking at next year and thinking about what I'm going to be doing. I think the prefab projects are going to be starting to steamroll. We're going to be doing more and more. So I may be pretty busy with that. So I may not take on that much more right now, other than, growing what I already have, which is also a great place to be.
Yeah, no, I think it's good to stay focused and just keep moving forward. So, what do you have any long-term goals or vision for these prefab houses?
Well, the concept was really that property in Austin, we believe, is going to ultimately be very valuable.
Mhm.
And so even if proper prices are going down, the idea is that ultimately prices will go up. So that's why also, I buy other properties in Austin, and single family homes that I Airbnb. And I like Austin for the reason that over time, it's kind of works a lot like Los Angeles, which is that it's going to appreciate. And
Mhm.
so the idea is to keep these properties, as many as we can. And we may end up flipping, like, a couple, but I think that the idea is to really build this portfolio in Austin. And I just love I love appreciation. Like, we can't count on appreciation, we count on cash flow,
Mhm.
but we can make an assumption about appreciation, and appreciations where you really can grow a lot more wealth a lot faster. Because, if I'm making, 20,000 a month, that's great money. But if my property goes up $500,000, boom, I'm in business. So yeah, so I think that, I'm kind of a person that likes to continue building an asset column. And I think it's really valuable for building wealth. And it gives you a lot of flexibility and choices, because you have these assets that are growing for you all the
Mhm.
time.
And I think, you talk about appreciation. I think that that only works well when you have a long-term outlook like you're talking about. And you talked about running the numbers over and over, making sure that those assets can support themselves, or your whole global sphere of assets can support another asset that while you wait on the appreciation. I think that's so important.
Yeah, absolutely. And I think that you need to yeah, I mean, I think that you want to be patient and not think that you're going to retire necessarily on just one asset.
Mhm.
But as you build and grow, then it just keeps adding up. And I think that that is a great way to grow wealth. The other thing is that with appreciation is, if you really want to count on appreciating assets, one of the places you need to look are in places that have high density population, and generally in those areas prices are higher, so it's
Mhm.
harder to cash flow at those places, which is why I Airbnb, because I like the cash flow and the appreciation. So this is
Mhm.
enabling me to do it. Although I have to say, it's funny. I recently wrote an article for Bigger Pockets saying 5 reasons not to buy an Airbnb. And now there's been a lot of press coming out about how Airbnbs are oversaturated and a lot of people didn't buy right and they're losing their shirt. And I just think that, you want to be, if an Airbnb, you want to run your numbers the same way with an Airbnb as you do a single family. Like, don't think just because, you have an average of a certain amount that it's going to keep going. You want to anticipate that it may go down. And what are you going to do?
Mhm.
I had one that I was making a ton of money. It wasn't in Austin, it's by San Antonio, and it just stopped. So,
Really?
yeah, it just like totally like, it just completely went dead for like 2 months. So I could make a couple choices. One was I could clean it out and rent it long term. I could lower the price because it would cash flow that way. I could lower the price. Or I could get creative and think, how can I make a great place even better? And that's kind of the strategy that I went with. I bought a hot tub. So
Oh,
I have a 7-person hot tub. It did cost me like $8,000. But my sense about it is that even if places slow in the area, there's still people renting. So now I will definitely, I feel like maybe 2% have hot tubs in the area. So I feel like I'll beat out the competition. But
oh
I will
yeah,
let you know, you may have to have me back on to share about that. I don't know. That's part
yeah.
of it. I mean, I may end up renting it. You have to take some chances. There's not a guarantee sometimes.
Well, at least you'll be renting it with a hot tub, and you'll definitely get higher rent there.
Yeah, for sure. Yeah, exactly. Like for sure with a hot tub, you'll get higher rent because that
Mhm.
is, and I bought a brand new one and I didn't cheap out on it because that's the one thing. If you want to do a hot tub, you have to be careful not to get like a used one that has a lot of problems, because you never want, that's like the worst call you want to get from tenants because it's not easy to fix. It's
Mhm.
like if the hot tub goes out, they get really pissed and it's a pain in the ass to fix. So that's like
Yeah,
two double whammies that you don't want.
yeah. No, you bring up a good point there too. Of hey, people are saying some Airbnb bookings are going down, so what can you do to overcome that? And something you can absolutely do to overcome that is just make them really good. So we were talking about that the other day. We run a short-term rental here in Austin, and we're saying, wow, we need to make this thing awesome. So we stand out on above the crowd. It's like a hotel. Do you want to go to the W, or do you want to go to the Holiday Inn? People see the W and say, wow, that place is amazing. I'm willing to go there and pay a little extra versus going to the Holiday Inn and maybe having a crappy room or dirty towels, or you just got to make your Airbnb stand out and look amazing. I think that's great advice for anybody right now, is double down on your customer service and how your place looks and the photos and everything around that.
Yeah, and it's not that hard. I mean, people get so cheap about photos, and I mean,
Mhm.
they're only like a couple $100 to get a great
Yeah.
photographer out. So, I mean, definitely don't cheap out on the photos,
Mhm.
because that is like the easiest way to make it look good and the cheapest. So,
Absolutely.
yeah, and I mean, I have a couple Airbnbs, and like this is just the one that gave me problems, and so I kind of looked at it, and I mean, either way, I can still cash flow that. And that's another thing, like vacation rentals is where a lot of people, I think, took on a little bit more risk, because
Mhm.
with a vacation rental, you can't necessarily cash flow it with a long-term tenant. So,
Sure. That's a good point.
yeah.
Do you have a favorite business or mindset book that you like to recommend to people other than your own, Tamar?
Yeah. So my favorite one that I'm reading right now that I absolutely love is Jordan Peterson, 12 Rules for Life. And it's not necessarily a business book, but it's just a book where you just go, I just feel like you're constantly like, oh my God, that's such a good point, and that's so smart, and this
Mhm.
makes so much sense. And it just makes you it just you know, if you have rules for life and you're effective at it, then you'll be effective at business too. You'll be
Mhm.
effective at real estate, you'll be effective at everything. So I like that book a lot.
A great book, and I believe the audiobook he narrates it. So
Hmm.
I love
Yeah.
the audiobooks where the author talks. He has a very unique voice, so it's unmistakable that it's him narrating. Tamara, what's a great way for people to get a hold of you or to follow you and learn more about what you're doing?
So they can go on Instagram at wealthbuildingconcierge.com. Oh no, for Instagram it's at wealthbuildingconcierge, and then my
Mhm.
website is wealthbuildingconcierge.com.
Oh, cool. Awesome. And we'll
Yeah.
have that in the show notes for everybody
Oh.
too. Tamar, the most important question we ask here, and the last question is, what's your favorite restaurant in Austin?
Oh yeah, the most important question.
Yeah, most important.
This is so hard to answer because I love so many restaurants. You
Mhm.
know, I really love Odd Duck, but there's this one restaurant, and I'm
Mhm.
gonna look it up because I absolutely love it. So bear with me for 1 second, because I just forgot the name of it. It's not very expensive,
Oh.
but it's really good. It's really, really good. It's like barbecue Asian fused together. It's in East Austin, and it's been written up quite a bit. Hang on, I'm gonna look it up because I can never say the name. And when I tell you it, you're gonna be like, oh, now I understand. It's called like Kenji Satora or something. I can't remember.
Mhm.
Let me see if I can figure that out. Usually I have it in my book, but I'm not finding it. Let me see what it's called. Oh, I don't know. Well, go to Odd Duck and then we'll put it in the show notes. I'll find it by then
Yeah, yeah,
because it's
absolutely. Odd Duck
so
is great
good.
too.
It's so good. And I just can't remember the name of it. I always forget the name. I should have prepared that, but I just thought of it when you said that. I was like, oh yeah, I love that restaurant.
Yeah, Odd Duck is great too. So we'll put both in the show notes for everybody,
Okay.
but um Odd Duck is amazing and you won't regret that. Well, awesome, Tamar. Thank you so much for coming on. And everybody, if you're looking to follow Tamar on social media, it's on Instagram at Wealth Building Concierge. And
Mhm. And
then,
I do LinkedIn too. LinkedIn I'm on a lot.
yeah, LinkedIn and then wealthbuildingconcierge.com. Well, thank you so much for coming on here. We'll
Thank you.
absolutely have you back on in the future to talk about the hot tub and we'll see how that went.
Awesome. I know, right? Like I'll tell you the restaurant and the hot tub. We have so much to look forward to.
There you go. Perfect. Well,
Thank
thank
you.
you. I'll talk to you here later.
Okay, bye.
Bye.